Hello YouTubers, how are you? Hope you're doing well. Today I'm gonna talk about Tullow Oil. It's a UK based company. They've been around for many years. Unfortunately at the moment, because of the oil price, it's been kicked out of the FTSE 100 a few years back, and now they are FTSE 250 company. And yeah, so let's introduce you to Tullow Oil, where they operate, what they do, where they're gonna drill next, and so on. So yeah, in terms of operation, they have 70 licenses across 14 countries, and they are mainly focused in Africa, Ghana. That's where their main producing assets are. Okay. Okay, so let's have a look at one of their half-year result, just to get an idea. Okay, so they produce roughly 86,000 barrels a day, 355 million cash flow, in a sales of 1.68 billion, with the underlying cash operating expense of just over $11 a barrel. Okay, let's look at the latest results. Okay, so it's actually quite a lengthy result, so I won't go through the whole thing. It's about 32 pages long. Okay, so let's start. Okay, so they have a new CEO called Rahul there. He joined around 6-7 months ago. So when he came, he changed the management structure, so it's like a new Tullow Oil kind of. Okay, so this is their result. So they've managed to produce 77,000 barrels so far, in line with expectation, on a revenue of 731 million, gross profit 164. Total loss after tax is 1.3 billion, so that is big. And they had a write down of 1.4 billion. So again, all these things, because of the low oil price, the results are very not investors friendly. Their net debt is roughly $3 billion, which is very high, and they have a headroom of 500 million in terms of free cash. So in terms of money, they're okay, not too bad, but the debt is very scary. So I'm going to come back to that in a bit. So the way they're going to tackle this is by selling one of their assets in Uganda for 500 million, just under 600 million dollars, and that should bring the net debt to 2.4 billion in the next few months. Okay, what else? Yeah. Yes, so if you have a look, Ghana is where their main production is. So they have, from the Jubilee field they produce 30, and from the 10 field they produced 24. So these are the main two. Yeah, so total is roughly 77,000 barrels. Okay, I won't go through any more. Let's look at another one. So let's look at the capital market day, which happened on 25th of this year, November. So again, I won't go through the whole thing, it's very long, so I'll just go through the most important part. Yeah, it's about 47 pages long, so bear with me. So there you go, this is the new management team in place. Rahul Dir, the CEO, and Les Wood, CFO. Yeah, so yeah, new leadership, new Tullow, as expected. Okay, this is the management team which Rahul put in place when he came into Tullow roughly 6-7 months ago. So this is the plan from now till 2030. The operating cost, it's 11, well, they're targeting $11 a barrel, which is one of the lowest in the industry, and they do operate in a very low labor intensive, low labor cost environment, which is Africa. Hence why the operating cost is just $11 a barrel, and it's one of the lowest in the industry. So bear that in mind, that number, $11 OPEX barrel target. Okay, again, very similar thing. Yeah, so have a look at this at your own time. It's very long, so you need to do a lot of research. I had a look, and yeah, it took me a while to read. So I'll just go for the most important part. I want to show you what's going to happen in the next few months. Okay, so yeah, this is the Jubilee and 10, and this is the cost structure. So if you look, the cost has gone down in terms of operating expense. So for the Jubilee field, as of now, is just under $10 a barrel, and for the 10 field, currently is about $8.3 a barrel. So overall, it's going to be an average about $11-12 a barrel operating cost, which is very, very good. Okay, let's have a look. Where is it? Looking for Guyana. Where is it? Okay, yeah. So in South America, they're gonna have a drill in Guyana, I believe, in the next few weeks. Yeah, there we go. So in Guyana, they are planning to drill in the next quarter, 21, and this is very exciting because it's right next to a block called Hammerhead, which is ExxonMobil's largest discovery in Guyana, and their Tullow's block is adjacent to it, which is very exciting. There you go. Hammerhead is part of the Liza field, which is owned by ExxonMobil, and the Orinduk block, which is right next to it, made a discovery big one. Yeah, so this is one of the reasons why I think Tullow might do very well, especially if they find any oil in Guyana. So I want to go through the whole thing, have a look at this at your own time. So let me come back to why you should invest in Tullow oil. Well, they produce roughly 86,000 barrels a day. They have a debt of $3 billion, but they sold one of their assets for just under 600 million. Hence why the net debt is $2.4 billion, and their cash or the headroom is $1 billion. So in terms of them going bankrupt, right now it's unlikely, because they have $1 billion to play with. So if the oil price stays low for much longer, then yes, there's a possibility they might go bankrupt, but they have $1 billion to play with. Again, if it's something safe you're looking for, this is not for you. This is very high risk, high reward stock, and it is very risky. So if risk is not your thing, then please don't watch this video. Okay, so let's look at the share price. Okay, so currently they are just under 30p. Year to date, yeah, it's fairly flat, nothing exciting. And look at all-time high. Okay, so this is interesting. So at some point they used to be around 15-16 British pound per share. Right now they're 30p. So you can see the volatility in that one. But because of the situation the world is in now, the demand for oil, it's pretty low. But at some point in the future, the price of oil would go up. And with the current oil price, which is $50 at the moment, and you've seen the cost is about $11-12 a barrel. So you can see, even though the oil price is very low, the cost is ridiculously low. It's one of the lowest in the industry. So this is why I believe Tullow oil would do very well in the next 2 years. I believe it can go 5x, 10x. Yeah, they're very high numbers, I know, but remember, this used to be a £15 stock, 15-16 pound, not too long ago. So yeah, so it's fairly flat, nothing exciting in the share price, but I believe this is about to change. So I'm buying. I don't know about you, I like high risk. So if this is something you found useful, then please press the like button, because it takes a lot of time to do this research and I bring this out to you. And if you want, you can subscribe to my channel, and until then, goodbye.